the path is similar in the sense that we expect growth to slow in 2025 as well. Right now, China's still benefited from a significant export surge, particularly to other emerging markets. That's helped to keep growth up despite a weak domestic economy. Going into 2025, there's, of course, the risk of tariffs, particularly if President Trump returns, but also the possibility simply that destination markets for Chinese exports slow, and that would mean less of an impulse from exports. So with the housing downturn ongoing and one of the key segments, exports, slowing, it does seem likely to us as well that growth will slow into 2025.
And certainly the headwinds, the foul winds from the macroeconomic backdrop are causing the Shanghai market to not be able to get off its knees. I think it's sitting around a 6.5-month low. So tell me why, Andrew, if you've got an overweight on China A shares, what are you seeing perhaps that others are not?
Well, our strategists are really looking, among other things, at very low valuations in an international context and the possibility that we'll see somewhat more policy stimulus going into the later months of the year. Again, given the likelihood that export growth will decelerate into 2025, we'll probably see easier fiscal policy in coming months. We have significant untapped government bond issuance scheduled for this year, and we do think that fiscal spending is probably the preferred lever to support growth. So we are expecting something of a transition as we head into 2025 with more support from that area.
Andrew, if it is Trump's second term, and if he does move forward with 60% plus tariffs on China, does that tip China's headline GDP further?
Very challenging. We would think that if he were actually to impose 60% tariffs across the board, we estimated that would reduce GDP by 2 full percentage points. Clearly, there'd be some offset from looser fiscal policy in that scenario, but it would be very challenging from a growth perspective.